You're right about Coke. On rare occasions, it is traded at a bargain price. We bought it, I think, in 2009, 2010, when it was trading at what we considered to be um, a low price relative to its long-term growth. Uh, I guess the key thing for us is the ability. The key measure that we focus on is cash, the ability to generate cash, cash that belongs to the shareholder, and that doesn't have to be returned to the business to pay off debt or or go back into the business into its productive capacity to reinvest in the business. That that that's an important component. It's cash that is yours as a shareholder. So that's a very important number for us. And again, that's how business people think. Business people are riveted on the concept of cash generation. It's the lifeblood of the business, and to be able to generate more cash on a consistent and long term basis is what we really spend a lot of time on. So and what's a bargain price? Well, a bargain price can be on current earnings, on current cash flow. It can be on these equity bonds that we look for, on businesses where we can look out a couple of years or 3 or 5 years and say, this business is so predictable that we can see that its cash is growing at a very it will grow at a very very predictable fashion, and therefore we can look out 3 years and say, well, that free cash flow is going to be at this level, and based on this very predictable growth in the business, we could see that on that future number, it's going to appreciate in value. So situations like that. On current earnings, it may not look particularly cheap. So you have to be open to what is the real definition of value.